Hey guys, what is going on? Welcome back to the portfolio. Again, I want to thank everyone out there for supporting the channel. If you guys have any great video ideas, any stocks that you are currently taking a look at, please let me know. Always looking for new video ideas and stocks to research. For today's video, in response to a viewer on the channel, I thought I'd talk about ways in which you can play large swings in the stock market. Whether a stock market is trending up or down, you can play different types of investments to take advantage of that. There is definitely a concept known as market timing employed in this strategy, and if you've watched my prior videos, I don't necessarily think that's a great strategy over the longer term. It does have its particular situations in which it can be used, but for the longer term, it really isn't a great way of making money because there's just too much risk in this type of trading. But like I've said on a lot of my prior videos, risk equals reward. So the riskier the underlying investment, the greater the potential reward as well. You could lose all your money, but you could make a ton of money as well if it does go in the right direction. So having said all that, let's jump into the investments here. These investments will essentially be tracking what the overall stock market is doing. The first one here, as you see up on screen, QQQ, Power Shares, QQQ. This is simply an ETF, but as we'll talk about in the strategy, there's other types of products that are related to this that can supercharge your rewards, basically using leverage, as well as using the opposite of the index, or trying to replicate the opposite of an index. So even if a market is moving down, you can still make quite a bit of money by doing sort of an inverse ETF strategy. So this stock, as you can see on the bottom there, is the modified market cap weighted index of 100 NASDAQ listed stocks. So these are going to be technology heavy stocks like Apple. If we take a look up on top here, you can see performance today was not very good, down 3.25%. That's essentially what the overall market was doing in the NASDAQ today, down 3.25%. So this is really just an ETF tracking the overall market. Again, on the bottom there, the companies in the NASDAQ has particular parameters for the index. But what you can do is jump into something like this, which essentially is the same type of ETF, but it's leveraged. So you can see as this one went down 3.25%, this one here is 3 times leverage. It's down 9.59%, about 3 times prior. And you can see on the bottom here, this is a 3x leverage exposure to a modified market cap weighted index tracking 100 of the largest non-financial firms listed on the NASDAQ. So essentially the same thing as QQQ, only it's leveraged. And because it's leveraged, it'll move much more quickly than the overall index, the QQQ index. So again, while this moved 3.25%, this moved about 3 times that at 9.59%. So the market was down today. Both of these are in the negative. QQQ about what the market did. TQQ 3 times the market. So how can you use this to make money if the market is trending down? Well, you can use an inverse ETF. This is QID ProShares Ultra Short QQQ. If we take a look at the bottom here, you can see this provides a 2x inverse exposure to a modified market cap weighted index of 100 large non-financial issues listed on the NASDAQ. So essentially the exact opposite of QQQ and TQQ. Again, this is 2x leveraged. So the index here down 3.25%. You would expect the 2x leverage inverse to be up about 6.5%. And you can see here it's up 6.41%. So even though the overall market was trending down by quite a large margin, you made a very nice return here by investing in the inverse of that 2x exposure. You can also do a 3x exposure as well. If you take a look at the bottom here, this is a 3x inverse exposure to a modified market cap weighted index of 100 of the largest non-financial issues listed on the NASDAQ. Again, the overall index, the QQQ, was down about 3.25%. 3x, you would expect it to be right around 9 to 10%, which it is here, 9.85% in the green. So even though there was a very bad day in the market overall, this particular stock is up 9.85%. So again, this was a video suggested by a viewer on the channel. I did a video similar to this about a year, maybe 2 years ago, with exactly the same strategy. I don't necessarily like this strategy just because there's a lot of market timing that's involved with this particular strategy. If you put a bunch of money into QQQ, for example, it's not that big of a deal over the longer term because this can be a buy and hold stock. It's simply an ETF, exchange traded funds, a fund with, as you see on the bottom here, again, just to remind you, 100 NASDAQ listed stocks, modified market cap weighted. these index will vary a bit, but essentially it's simply an ETF. If we take a look at the longer term graphs here, 1 year it's up 5.91%. Over 5 years it's up 103.67%. So it's not too bad to essentially jump into the stock over the longer term. TQQ, 1 year you can see down 0.3%. 5 years that's up 401%, 0.15. Again, a little bit more risk in leveraged accounts just because there's so many more variables, and the market index will move much more quickly per its underlying index, or the price of this stock will move much more quickly than the underlying index will move. Makes it a lot riskier, but again, risk equals reward. The riskier the investment, the greater the potential reward as well. The loss is much greater, but the reward is much greater as well. If we move into these companies, or these stocks, for example, QID, SQQ here, very good one-day return, but if you take a look over the longer term, down 17.49%, 5 years, 82.95%, but especially the 3X leveraged account here, 1 year down 29.46%, for 5 years down 94.11%. These are very risky stocks to hold for the longer term. These are essentially not meant to be buy and hold ETFs. They are somewhat complex in the way they are configured, but these are really short-term, high-risk, high-reward gain stocks that are only meant to be held for maybe a couple days, if not just within intra-trading in one particular day. Intraday trading. You don't want to be holding these stocks over the longer term. Just the way they are designed, again, they are only designed for short-term use. They're very high risk. You can lose a lot of money, but you also can gain a lot of money as well. They are based on a number of derivatives. It gets quite complex. I'm not going to go through all of the ways in which these particular holdings are put together. But SQQQ here, as well as QID and ultra short QQQ, you don't want to hold these over the longer term. Or excuse me, TQQ and QQQ, you can definitely hold these for the longer term. QQQ is definitely the safest because it's not leveraged. TQQQ here is leveraged. QID and SQQQ are definitely stocks you don't want to hold for the longer term. So a very unique type of strategy. It does employ market timing. It does have its specific uses. I don't necessarily encourage investors to jump into this type of trading. This is definitely complex, and you definitely have to base this on some sort of macroeconomic movement. Jumping into QQQ would be just like jumping into any other broad-based ETF, but the other entities, TQQQ, QID, and SQQQ, much more risky, with the inverse ETFs being only short-term, high-risk stocks you don't want to be holding for the longer term. So I hope all that makes sense. Again, this was a viewer-suggested video. Definitely thank you for mentioning this. If you want to go back about 1.5 years ago, I also put out a similar video. Went into a little bit more in-depth about how these inverse ETFs are put together. Take a look at that if you are interested in that. But these are fairly good ways of trying to play market timing, playing very large swings in the overall stock market like we're currently experiencing. You can make a lot of money, but you can also lose a lot of money on the inverse ETFs. So let me know what you guys are doing, if anything, with the market pulling back here over the last couple of weeks, couple months actually, in the overall market. Technology has definitely been pulling back quite dramatically, as we have seen here, with QQQ down 3.25%. Apple got hit very hard. AMD, some of the other technologies, semiconductor stocks, also trending down quite remarkably over the last few months. But they also had very big gains over the preceding 4 or 5 months. So not to be unexpected, but definitely if you think they are overpriced, they will be trending down in the future. A great way to take advantage of that, again, is using these inverse ETFs here, QID as well as SQQQ. And again, there are a number of these out there. I chose this particular set of stocks just because they're tracking the same underlying index, but there are different ETFs for a number of different market segments, as well as other exchanges as well. So again, let me know if you guys are using these particular entities at all in your trading strategy. I don't do a lot of this. I have done it in the past with okay success, but again, very, very risky, and that's something I would encourage novice investors trying to do. Overall, market timing is not a great way to make consistent returns over the long term. Again, let me know what you guys think, and kind of with that, I'll end the video. As always, if you guys enjoy the content on the channel, if you guys enjoy the video series, feel free to like, share, and subscribe. Until next video, we'll see you then.